Welcome back to Investing Talk podcast. Today we're taking a focused look at Telefonaktiebolaget LM Ericsson. You sent over a collection of information, and our aim is really to pull out the most important insights, especially regarding their recent performance and what it could potentially mean for you as an investor. We've got their latest earnings report, some historical background, and a sense of what analysts are thinking. So let's try and unpack what's most significant, maybe most interesting here. How about we start with their Q1 2025 results?
Sounds good.
Okay, so net sales hit SEK 55.0 billion. That's up 3% compared to last year. But the thing that jumped out at me immediately was that their organic growth was actually flat.
That's a really crucial point. You see the headline growth, the 3%, but that organic figure, which strips out things like currency changes or acquisitions, being flat tells a different story about the core business performance.
Right.
And what's really interesting is how different things look region by region. The Americas, for example, saw very strong growth, up 20%.
Wow, 20%. That's substantial.
It is.
But then you contrast that with EMEA, down 7%, and Asia Pacific. That was down 17%. Quite a drop.
Exactly. That regional split paints a much more complicated picture than the overall 3% rise suggests.
Okay, but here's where it gets pretty compelling, I think. Net income, it soared. Up 61% year over year to SEK 4.2 billion. And that pushed their earnings per share up to SEK 1.24, a very noticeable jump.
Definitely.
Their profit margin also saw a big increase, moving from 4.8% up to 7.5%.
And that margin improvement is significant. It also means they beat analyst expectations quite considerably.
Yeah, the note said by about 47%. That's a huge beat.
It really is. A surprise of that size, it often suggests, some real improvements in efficiency or maybe a successful shift towards higher margin products.
Yeah.
It seems like efforts to streamline operations or manage costs might really be paying off.
So potentially a sign of a stronger operational footing.
Potentially, yes. It could signal a real shift in their ability to generate profit more effectively.
Okay. Now, what about cash flow? Free cash flow before M&A, it did dip slightly to SEK 2.7 billion. The report mentioned this was due to regular seasonal payments.
Right, which is fairly typical.
But their overall net cash position looks incredibly strong. It increased by 258% compared to last year, reaching SEK 38.6 billion.
That is a very healthy balance sheet. Having that much net cash gives them a lot of flexibility, for investing in growth, weathering any potential downturns, or maybe returning capital to shareholders.
So while that free cash flow dip isn't ideal,
it's less concerning given the overall strength of their cash reserves, their liquidity.
Okay, let's maybe step back a bit. Look at the bigger picture, the historical context. Over the last, say, 3 to 5 years, Ericsson saw moderate revenue growth, mostly fueled by that North American expansion and, obviously, the big investments in 5G infrastructure.
That's been the main driver.
But, as the latest numbers show, some other regions have faced challenges.
They certainly have. And it's worth remembering the full picture for 2023. Even though net sales were quite high, SEK 263.4 billion, they actually reported a negative EBIT. Earnings before interest and taxes were negative SEK 20.3 billion.
Right. That's a significant loss for the year.
It is. So seeing this recent Q1 profitability surge is quite a contrast. It does make you ask, how sustainable is this positive shift after such a challenging previous year?
Exactly. What's really changed? Are these drivers temporary or more fundamental? It's encouraging, but that contrast is stark.
It is.
Okay, let's shift focus to the business itself and the industry. Ericsson's position seems strong in advanced telecom tech, especially with patents in programmable networks, and their long history deploying wireless infrastructure, particularly 5G.
That's a core strength. Their technological leadership, especially in 5G, is a major asset.
You mentioned those programmable network patents. Can you maybe briefly touch on why that's important right now?
Sure. Programmable networks essentially mean more flexibility. You can customize network functions using software. This is becoming crucial for things like the Internet of Things, autonomous systems, advanced cloud applications. Really dynamic stuff. Having strong patents there gives Ericsson a technological advantage, potentially opening up new revenue opportunities.
Gotcha. And we also saw their gross margins improved quite a bit, from around 42.7% up to 48.5%.
Yes, another positive sign. That suggests better cost control, maybe a better product mix favoring higher margin sales, or perhaps both.
And positioning-wise, they're seen as a global leader, right? Alongside Nokia and Huawei.
Correct. with that particularly strong presence in North America as reflected in those Q1 growth numbers we talked about.
So key industry drivers are pretty clear. The ongoing 5G rollout globally, increasing demand for faster connectivity everywhere.
Those are the tailwinds, definitely.
But there are risks too. Things like geopolitical tensions, regulatory hurdles, and just intense competition.
Absolutely. Those are always factors in this sector.
The notes also mentioned analysts flagged a couple of, well, unspecified warning signs, operational or market risks. Any idea what those might typically involve in this industry?
Well, operational risks could be anything from managing complex global supply chains, potential delays or cost issues in large network rollouts, or even challenges integrating new tech. Market risks could include tougher price competition, shifts in what customers demand, or maybe new disruptive technologies emerging. Standard industry pressures, really.
Okay, understood.
Yeah.
Let's talk dividends. They confirmed payments for the year at the AGM, around SEK 2.85 per share in total.
That's right. They confirmed a dividend payout.
And after that strong Q1 report, the stock price reacted positively, up about 12% over the past week.
Yes, a noticeable jump. And trading volume increased, too.
Seems like a pretty clear positive reaction from investors to that earnings beat and the margin expansion.
It makes sense. The market generally likes seeing better than expected profits and improved margins. The higher volumes suggest more attention is being paid.
So if we try to summarize, strengths would be that tech leadership in 5G and programmable networks, the improved profitability and margins, and that strong North American presence.
Those are definitely the highlights right now. Key advantages.
But potential concerns.
Yeah.
Well, the flat organic growth overall is one thing to keep an eye on, despite the strong Americas performance.
Yes, that underlying growth picture needs watching.
And that negative EBIT from 2023, while historical, still sort of looms in the background.
It's context that shouldn't be ignored. Plus, those unspecified analyst warnings, while vague, do hint at some potential underlying risks or uncertainties investors might want to consider.
Looking forward, what are the potential positives? Continued innovation in 5G, maybe expansion into cloud services.
Those could certainly be catalysts. And they recently launched a new wireless-first architecture, which could also be a positive development.
But the risks remain broader macroeconomic uncertainties, potential regulatory changes affecting the telecom sector globally.
Those are always present, yes. External factors.
And finally, just touching on sentiment. Online. It sounds like cautious optimism. People are noticing the better margins, but still wary of the competition.
That sounds about right. It reflects the mixed picture we've discussed. Excitement about the profit turnaround, but awareness of the challenges.
And compared to peers, like Nokia, Ericsson seems to have shown stronger margin improvement lately.
Based on recent performance, yes. That comparison gives some useful context on their relative operational success within the industry right now.
Okay, so wrapping this up, based on the information provided, we're seeing a company with clear tech strengths, especially in 5G, and a really impressive recent turnaround in profitability. However, the flat organic growth and some of those historical challenges suggest it's, well, a nuanced picture, not entirely straightforward.
Agreed. There are strong positives, but also points that warrant continued attention.
The market's positive reaction to the latest earnings is definitely encouraging, though. So this exploration hopefully gives everyone listening a solid overview of where Ericsson stands right now.
A good starting point for further investigation.
Absolutely. To dig deeper, checking out their investor relations page for the full reports is a good next step. Financial databases can also offer more detailed metrics and analyst ratings.
Good advice.
And of course, we encourage you to subscribe, like, and comment with any further questions you might have. Now, here's something to think about. With AI advancing so rapidly and the huge demand for powerful network infrastructure to support it, how might Ericsson's leadership in 5G and those programmable networks position them? Could they capture opportunities beyond just traditional telecom services in the future? Something to consider.